you waiting for rates to come down before you buy? If so, you will want to pay attention to this video. I've been brokering mortgages since 2009, and I've seen the ups and the downs in the real estate market and interest rates over that time frame. I could stand here and tell you that based on my experience, you should be buying right now. That really doesn't mean a whole lot to you. Instead, I'm going to prove to you why waiting for rates to come down could actually end up costing you more. The biggest influence on the real estate market is supply and demand. Currently, demand is on the lower end as interest rates, of course, are higher. However, when interest rates drop, which is expected in the next few months, demand is going to pick up. All those people who have been waiting on the sidelines for the last 12 to 18 months to time the market, they're going to realize that they might miss the next opportunity to purchase and will become more active. Supply hasn't changed all that much, so with this surge of buyers, the increase in demand will result in increased home prices. Now, you don't have to take my word for it though. CMHC, the Canada Mortgage and Housing Corporation, released a report just a little while ago in the beginning of April, forecasting that in 2025, home prices will reach their peak levels that were last seen in early 2022 and new highs in 2026. They're citing declining mortgage rates and Canada's strongest population growth since the 1950s as the reason for this surge in home prices. With that information in mind, we ran some numbers to get a better understanding of either the costs or the savings of declining rates versus increasing in home prices. Here's what we found out. 0.25% rate decrease is offset by a 2.2% increase in home price. 0.5% down, 4.5% up, and a 1% decrease in rate is offset by a 9.8% increase in home price. It's a lot of percentages and numbers. It might not mean a whole lot to you, so we'll make it a little more realistic. If you want to buy a home for $500,000, that home only needs to go up by $11,000 and it's offset that 0.25% rate decrease. On $1 million, that only needs to go up by $22,000. Now, the average price of homes is down since 2022 by about 15%. If they go back to that in 2025, on that $500,000 home, that's up by $75,000, and $1 million home, it's up by $150,000. That's way more than what you're going to see from savings on a lower interest rate. And keep in mind, prices are forecasted to go even higher in 2026. Simply put, home prices will outpace interest rates, and even though your rate will be lower, you're going to have to borrow more money, which will cost you more, or at worst, you could get priced out of the market. Stop waiting. Take action. There are still lots of opportunities for buyers. Current market conditions allow you to negotiate, but it won't be long before that's off the table and you will be chasing the opportunity to buy. Get in now and ride the next wave of property value increases to grow your wealth. Contact me if you want to get pre-approved, and let's put a plan in place on how you can buy your next home.